Check, please.
Hey guys, welcome back to Everything Money. Today we're revisiting Costco. We're going to talk about the stock, the financials, why Charlie Munger loves it. We'll show you what's under the hood of this company, their profit, their revenue, their shares outstanding. We'll show you what you should be paying for this company using our amazing Everything Money stock analyzer tool. And if you can trade this stock with Mo, he'll guide us using the charts with those candles and the moving averages and all of that and more. I bring your questions to Paul and Mo. These guys own and operate real estate businesses, lots of money in stocks, and they'll guide you and I and provide a mindset about whether we should be buying or avoiding a great company like Costco. Go ahead, Paul.
Guys, Costco is Charlie Munger's favorite stock in the world. He loves it. He preaches about it. Low margin business, but they do a great job getting a high return on invested capital. And customer experience is huge. And people love it. I mean, Tim over here loves Costco. I like Costco. I like their gas prices, everything. So let's look at Costco from an 8-pillar perspective. So here's our 8-pillar software.
We use these 8 pillars to analyze the stock. Say you're new to this. Where do I even start? Most of you just see a ticker price and say, is it a buy or is it not? We'd like to show you the foundation of what we look at when we're the 8 pillars of what we look at a company and its health. What's under the hood, Paul? Give it to us.
So the 8 pillars was my initial screen for stocks when I was doing my own investing without the channel. I just sit there and say, here are the things I want to look at. So first off, Costco, off its all-time highs, it was 571. Now it's at 529, so not too far off, about 10%. Let's go to the 8 pillars tab. So guys, a few X's here. 1, shares outstanding are up slightly, not a big deal. Remember guys, we want shares outstanding decreasing, especially if it's an undervalued company. We want them buying back shares to give you more ownership of the business. We don't want them issuing shares as much. Now, when the company's expensive, issue shares all you want. I'd rather you do that than to take on some debt and all of a sudden we're on the hook for debt. Sell people overpriced shares. Low debt levels, less than 2.7 times free cash flow for the debt levels, free cash flow growth, net income growth, revenue growth, high return on invested capital, which is pretty hard to do, I think, in the retail world.
Yeah, for example, Kroger has a 6% return on invested capital, much different.
Kroger does?
Yeah.
Wow, what about Walmart? Look up Walmart. Now, guys, the 2 areas here, if you've watched our channel before, the 2 red flags, valuation metrics. The 5-year PE is 58.6 and the 5-year price of free cash flow is 53.68. That's pretty high. I mean, this is the kind of numbers you don't even see on big tech companies. I mean, this is a very, very high multiple. Now, Charlie Munger loves the stocks. A lot of people are out there going, oh, I'm going to buy it. It's like, well, I don't know if Charlie Munger is buying more of the stock. Mo?
He said, I love this company. I would not, but based on the way that I invest, I would not be adding to it right now. He said, I would not be buying it right now. But he said, I do not foresee myself ever selling it either.
So Charlie's just being, why time things? He's just like, listen, I have a good company. I don't know what's going to happen. And it might double in price. And from that standpoint, maybe by the time there's a correction, the valuations double, the fundamentals double. So why sell it? So he's doing the smart thing there. So what we're looking at here is, I want you guys to see the income statement. Well, I want you to see the main part. Look at this margin, 2.6%. What was Walmart's return on invested capital?
Walmart is at 12.
Oh, wow.
Yeah, and what margin? Walmart is at 2.4%.
Margin.
Kroger is at 1.2.
Yeah, so guys, this is all about the experience. Costco has a great user experience. When people go there, they love it. I mean, Mo loves it. Tim loves it. Seth, are you a fan?
No, not at all. But that's why I'm surprised that there's this fandom behind this silly company, Mo. It's like
so it is incredible. I actually got some delivered from Costco last night. Now they have high-end brands like Creed Cologne, Hermes, La Mer. It's a facial
I'm
product.
surprised Hermes allows that to be sold
Bobby
there.
Valentino. It's incredible.
Kathy Ireland.
I don't know what that is.
She was part of Kmart. You don't know who Kathy Ireland is?
No.
Well, she was very famous before Mo was born.
That was a cartoon, and I would have believed you.
Look up Kathy Ireland. She's a smoke. She was like the it girl from when we were in high school, right?
Mm-hmm. Keep going.
Okay, so what we have to do here now? Yeah, wow, exactly. Thank you very much, Mo.
She's on the front of Forbes, too.
Very beautiful.
Pardon me?
She's on the cover of Forbes.
Oh yeah, because she did this line with Kmart and she made a ton of money.
Supermodel, super mogul.
So guys, the stock is very famous, very exciting. The company, everybody loves it. But one thing I want you to do with all retail, I want you to go to the metrics page of our software. scroll to the bottom, hit annual reports. I want you to find the 10K before you invest in any retail business. This is going to take you right to the SEC website, and it's going to show you exactly the 10K right here. You need to find the comparable store sales. This is so important in retail. What that number does is it tells you for companies that have been around for at least a year, and every company has a different idea, but it's basically the stores have been around for at least a year. How are their sales done? Have they grown? Have they not grown? Because Costco's looking to increase its number of stores, right? Yeah. So you want to make sure that the stores that are open and have been open are still increasing sales. Mm-hmm. Now, the benefit is inflation's happening, prices are all going up. So naturally, compare the growth in sales at some point to inflation too. You want to make sure they're making strides there. But this is a very important factor in retail. Anytime you have retail locations, you want to look at same-store sales and make sure. Look at Dick's Sporting Goods we did the other day. Yeah. They had amazing same-store sales from even comparable to 2019 before COVID happened. They had 5.3% increase in same-store sales. So guys, I actually found the data in the 10K. Very simple. I Control F, hit comparable. Found it right here. Now, the last 3 years, comparable sales, U.S., Canada, international, and total company. 6% growth, 8% growth, 16% growth.
Wow.
16% growth from 2020. Now remember, stores were shut down in 2020, so 2021 was expecting to have a big jump. But even to see an 8% growth in 2020 compared to 2019, with how much of the year they weren't even open. And they were one of the first companies to have a strict mask policy. If you remember that.
Yes, they were.
They were one of the very first companies to do that. So these are very strong same-store sales. The next thing I'd want you to do, which we're going to find right now, is number of locations. So one of the areas I found in the 10K is capital expenditures. And in it, they talk about we opened 22 new warehouses last year and 2 relocations in 2021. And we plan to open additional 35, including 5 relocations in 2022. Okay? These are important aspects. To me, hearing those numbers, I think to myself, okay, that's good, reasonable growth. There's a lot of fast-growing areas in the south part of the United States and western part of the United States. They're going to have to grow as they grow outward.
More warehouses and relocations definitely helps with shipping that stuff all over the country.
Oh, 1,000%.
Our Amazon seller for our product, they're opening up a new Arizona warehouse, and it's really going to help us with California, getting stuff out to Hawaii.
Well, if you remember, years ago, Amazon was spending so much in capital expenditures because of these distribution centers, and it's now paying off, even though they still don't make money shipping stuff. But either way, the point is they're opening stores, but it's not like 100 stores. So you can sit there and get this information in the 10K or talk to our community about it. So speaking of which, guys, our users asked and we delivered. We made the software for them. We created all of this. This software includes the 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive video content, watch lists. Guys, it's all available on your mobile phone. The exclusive video content, every single day we release videos just to people on our software and desktop and mobile phone. It's directed at them. It's from Seth, Mo, and I. You get access to us. You get everything you've seen here, plus what's else coming out. There's more stuff coming out every single day.
But if you felt alone, Paul, that chat.
The biggest thing we did, we created this Everything Money community chat. Over 6,000 people are in it. And they're talking every day. You can go in there and actually search for Costco, have conversations. You don't want to read a 10K? I don't blame you. I don't either. Go in there, split it up with people, talk to people. What have you found? Oh, everything's a Google search away, and people will aggregate their information together and be able to talk about it. We found that everyone was like us, feeling alone in their investing journey. This allows everybody to be together from all over the world to talk about the exact same ideas. Now, there's different opinions, but it allows you to bounce ideas off each other. This is all available for $1 per day, less than a cup of coffee. 2 ways to sign up, everythingmoney.com or Patreon for international users. It's so easy to do. Go sign up. Whatever price you sign up for today, as we increase the price in the future, you will not go to that new level. It's a no-brainer if you're able to make 1 or 2 extra % per year or decrease your losses by 1 or 2% a year. This will lead to hundreds of thousands, if not millions of dollars extra in retirement. Go sign up now, $1 per day.
Paul, what do I pay for this company in terms of ticker price? This is what we need to know.
So guys, we talked earlier about Charlie Munger loving the company, but wouldn't buy it at this price. So I pulled some analyst expectations in the company. These are the earnings per share expectations of the future. This is the revenue expectations. last year's revenue estimates were $220 billion. And in 2030, they're expected to do $382 billion. So an increase of about, 60%, 70% over the next 9 years? That's not big growth. So just keep that in mind. This premium of 50 times revenue and profit and free cash flow probably is a little high. Look at their earnings per share. They're only expected to a little over than double based on analyst expectations. And by the way, guys, in the last years, it's only one analyst. So you're taking one analyst information. Guys, take it with a grain of salt. I don't know how good these analysts are. They might be great. They might be bad. I don't know. But it provides some sort of framework for you to look at and say, okay, how can I be conservative? Maybe you're going to be conservative and look at the low numbers. And by the way, look at the deviation. Look at year-end August 2025. The earnings per share difference is $17 to $23 a share. That's a big difference. So always keep that in mind. The future is unknown. So what we did, we created our stock analyzer tool, the most popular part of our website, where we can make our own estimates. So I'm going to go in.
Mo's going to challenge you on a couple of
3,
these.
5, and 7%.
Same.
Okay. Profit margin 2.2, 2.4, and 2.6.
Okay.
Free cash flow margin, I'm going to do the exact same thing. PE 13, 15, 17.
Paul, it's 42 right now.
I know. And guess what? It's not going to grow fast. Guys, even the most aggressive of assumptions assumed 5 or 6% a year in revenue growth in the next 10 years. That's not a lot. If you think it's a high growth company, you're bananas. Hit the analyze button. And I always do 12.5% return because that provides a good margin of safety and a reason to invest in an individual company versus an ETF. And look at this. A low of 122, a high of 220. Current price, 530. Paul, it'll never get to that price. Do me a favor. Go through our library of 1,300 plus videos and look at all the times I was told in the comments the price will not go that low. And look how many times it actually happened. And we haven't even hit a bear market yet.
Yeah, you keep telling me that. I'm like, oh, things are bleak, Paul. And you're like, things haven't even started.
It hasn't even started yet. This
No,
is
it
the calm before the storm.
It's so funny. People are just messaging me like, okay, we're at a bottom. Let's go buy.
I saw that in Yahoo. I saw that Market Watch the other day. They're like, is March the bottom? I'm like,
my
bottom
dad
of what?
My dad just texted me as we were making this. And he's like, you need to go and start looking at these companies. I'm like, what, it's over?
Just do what I do with my father. Just lie to him and say you bought it all.
I bought them all.
That's what I did with my father. My father like, Paul, look at this great company. I'm like, oh yeah, I bought some. The problem would happen when the 1 out of 30 like tripled in price. He'd be like, you buy? Oh, I absolutely bought it. I just lie.
But were people trading?
Good news is the only person who watches this in my family is my cousin Yusuf, and I swear to you, if you tell a soul, I will murder you. He always messages me when I comment about him on our channel.
If you want to trade Costco at a quicker pace, with day trade, swing trade, momentum, long term, Mo can guide you in the bid and ask nation. Mo, what's going on over there?
So this is funny. I saw this story while I was reading for the morning show. With all the turbulence that happened during the pandemic and now with Russia, Ukraine, they just they're sustained. They keep going up. They've gained like 7% in the last couple of days or something like that. But the point is, pay attention to companies like this. I like to call these companies relative strength companies. They are strong relative to the rest of the market. So pay attention to them. Let's see if we can get this red line to start turning up and heading toward that sweet spot and move towards these all-time highs. That would be great. Put it on a watch list. Let the stock choose a direction from its trend and then go from there. Go long or short. Tend to think that this thing might be a long. If you don't want to do something long-term, come over here to the swing trading chart. The good thing that you have is your major moving averages are right on top of each other. I just circled 3 lines. It's your 100, 50, and 25-day moving average. It's going to be very strong to drop below those levels. That gives me more, I don't know what to say, more confidence that what I said on the previous chart is going to happen. It's going to stay right here, and it's going to move towards the top. So pay attention to this stock long-term. Now, Paul mentioned this earlier in the video. This is a stock that we day trade a lot. Even though it's $500 and some a share, every single day it has movement. Look, today it had movement. We didn't trade this today, did we, Paul?
I don't know. I didn't trade it.
It had great engulfing candlesticks coming in, consistent volume, and it was over 80%, and you could have had a heck of a day. And to be honest, if you bought it this morning at, I guess it was a little after 12 o'clock, you are still in this thing, and you are still making money. You would have purchased this at, let's call it $520, and now it's at $532 a share. So you're still in this. And every day, you can go short on it. You can go long on it. This is a great stock to have in a day trading portfolio, especially if you can spend $500 a share.
If you're drawn by having a new system, maybe a new process to investing, click on the upper right-hand corner here. You can follow along in a more deeper video about the 8 pillars and why we choose these metrics moving forward with stocks. That's our take on Costco. Follow, thumbs up, subscribe, and you'll see us next video. Thanks, Paul, for your insight.